Hello and welcome everyone to this webinar on 9 key FP&A functions powered by FP&A Professionals Institute. So thank you for joining us today evening. For the next 60 to 90 minutes, we will walk you through all of the roles and functionalities that is required for you to understand this particular function better, and hopefully one day you may come across a role and you may be in a position to get into an FP&A role. Maybe this could be the starting point. So quickly introducing us, I have with me my partner and co-founder. I'll let Dhaval introduce himself.
Hi everyone, great to see you all here today. My name is Dhaval Parvatikar. I'm a qualified chartered accountant. I've also completed my general management program from IIM Ahmedabad. Over the last 16 years, I've worked with various industries like oil and gas, software, advertising, and public relations. I've served as CFO in India and in the Middle East. I'm now the co-founder and lead faculty at FP&A Professionals Institute. I've mentored thousands of chartered accountants and finance professionals through various initiatives on LinkedIn, published over 40 plus articles, videos, training programs. Over the last 5 years, I've been an active online instructor and have coached more than 5,000 professionals on various topics like FP&A, finance leadership, business partnering, data storytelling, and much more. So I'm happy to partner here with Asif today. We share the same passion for helping finance professionals upskill themselves. It would be great to hear about you as well, Asif.
Thank you so much, Dhaval, and equally excited to partner with you. Yes, let me quickly introduce myself. I'm a chartered accountant based out of Mumbai, India. Overall, about 15 years experience in finance. Most of it is FP&A, so over a decade of working in FP&A across banking, pharma, and edtech. I worked with organizations like EY, Citibank. The most recent role, I was the lead FP&A for Asia Pacific for Coursera. Then, with some experience in edtech and passion for FP&A, we got into FP&A. Initially, we will talk about the FPI journey in the next slide, but that's how that led to co-founding FP&A Professional Institute with Dhaval sometime end of 2023. I am a regular contributor at many finance forums, including FP&A Trends, Finance Alliance, and FP&A Hub. So I've been a regular contributor both in terms of writing and doing guest sessions at multiple FP&A forums. Also, I've written 2 books on FP&A, all about FP&A from accounting to FP&A that you can see in the background on the shelf. So that is a little bit about me. With that, we'll quickly talk a little bit about FPI. So over the last 3.5 years, I've had the privilege, me and Dhawan have both had the very good privilege of talking to some of the top FP&A experts across the globe, right from North America, Europe, Middle East, Asia. So I have had personally conversations, and you can see one of those episodes are there on my YouTube, on our YouTube channel, with more than 25 FP&A experts across industries, across geographies.
I actively run a community of over 200 CFOs and I've hosted more than 10 CFO events so far across India and the Middle East. I've got some great opportunity to interact with some of the brightest minds across various sectors. I'm always connected with these CFOs, which has helped us, get better curriculum at FPI and also connect with these CFOs to help them with their talent requirements in terms of helping our FPI alumni to be placed in their companies as well.
Wonderful. Quickly, a little about our FPA as an institute. Dhaval started his FP&A Foundations online course on Udemy. That was back in 2018, I think 7 years back. That got a lot of positive response. Till now, I think that number might be an older number. More than 2,000, 3,000 people have taken that program. It has a very good average rating of 4.2. Sometime in 2022, I wrote my first book all about FP&A, and that's when we decided to come together, and we started our first live cohort of FP&A Masterclass, which is a 1 month FP&A coaching program for people who want to move from non-FP&A role audit, accounting, taxation roles into finance and FP&A roles. Our first cohort was back in 2022 end, and we had 25 students. After that, we have done cohort almost every other month. Until now, we have completed the 17 cohorts. 18th cohort is going to start in March. Across FP&A Masterclass, both live and recorded versions, we have trained more than 1,000 students till now. And after that, we went into this full time and we initiated other programs which were basically demands from our alumni on financial modeling for FP&A. And last year we introduced flagship 6-month certification on FP&A, which is Certified Global FP&A Professional, which we'll talk about more in this webinar later. Okay, so I'll just quickly give you. Well, can you just quickly do the introduction? I need a couple of minutes to just get some. I need to just be back in a minute. So can you just
Sure.
quickly do
Just
that?
bring the
Yeah.
entire slide.
Yes.
Cool. So yes, Umair, we'll try and give the recorded version of it. Yeah, let me do the quick introduction. So today what we'll cover is over the next 60 minutes or so. So we'll try and cover some of the aspects of the FP&A world. We'll try and understand how does a typical FP&A role look like? How does a monthly calendar look like? What are some of the activities involved in the FP&A function? When we think about FP&A, typically we think large part of our role is just budgeting and forecasting, but that's not the case. There are many things that FP&A teams do, and we'll give you a glimpse of 9 important functions that FP&A teams handle and how they can support the business teams with these various functions as well. And then finally, we'll talk a little bit about certifications in FP&A and how today new age certifications in FP&A can help you get better at your finance and FP&A roles as well. So that's a little bit about what we'll be covering today.
Thanks, Amal. So what we'll do is we'll quickly start with the FP&A calendar. That will give you an overview of how a typical month looks like or how a typical day looks like for FP&A professionals. I see some comments in the chat box. So we will come back to the questions at the end. So all the questions, you can just put it in the chat box and we'll take it after the presentation is over, maybe at the end of 60 minutes. So we'll talk about the FP&A monthly calendar. Typically, it's divided into 4 weeks as your typical calendars. So when you create for your different scheduling looks like, so it's week 1, week 2, week 3, week 4. What happens in week 1 is typically you don't get your numbers closed till the 4th or the 7th or the 10th of the month, depending on the organization. And the senior management won't wait till the 7th or the 8th or 10th of the month till they need to know the results on the 1st of the month, or maybe even on the 31st of the previous month. So flash reporting is what FP&A professionals do to bridge the gap between the month-end reports and till the time the books of accounts are closed. After that, the books are closed. Once the books are closed, FP&A teams would liaise with the accounting team, review the closed books or closed numbers for that particular month, and then start working on their management, start churning out management reports for different parts of the organization. That is how typically the week 1 looks like. Week 2 is on forecasting. We'll talk more about forecasting later in the webinar. So week 1 is reporting and books accounts. Week 2 is updating the forecast. Week 3 is more analysis, ad hoc projects other than your budget forecast. So working across the different cross-functional projects. A lot of people also like to do automation work during that week because it helps you speed up your week 1, week 2, week 4 for the next period onwards. And once you have submitted the forecast in week 2, you also need to keep an eye on risks and opportunities that could potentially affect your forecast that you have submitted in the previous week. So those are typically activities of week 3. Week 4 is again preparation for week 1, and you start doing all those activities that you can do in week 4 that could help you save time in week 1. So a lot of people do roll forwarding of reports, a lot of teams do preparation work, updating the models, assumptions. A lot of preparation work goes into week 4. And again, the flash reporting starts somewhere at the end of the month and it continues in week 1 as you go into the next reporting month. So this is how typically a calendar of FP&A professional looks like. Again, this is not a standard calendar. This is more of a average best practice calendar, which you've seen across more than 10 to 15 organizations. If you go into an FP&A role tomorrow, you might find slight differences. However, consider this as an average best practice calendar. Okay, so with that, we'll get into the today's topic, which is 9 FP&A functions. We'll talk about each of those functions one by one. So we'll go into that one by one. And what we will do is we'll not get a lot of time to go in detail of each of those functions because this is a 60-minute webinar. But you can deep dive into each of those functions. There are more videos on our YouTube channel on each of those. You can, if you want to deep dive on any of these functions, you could find more resources on our website, on our YouTube channel. And we'll also let you know on detailed certification on the entire program later in the curriculum, later in the webinar. So let's talk about the first FP&A function. So what do you think is the first FP&A function? Can you type it in the chat box? What do you think will be the first FP&A function? Okay, what according to you is the most important FP&A function? Waiting for some responses in the chat box. So if you had to pick one function, what do you think is the most important one? Okay, no responses. So let me get into it then. The first one is budgeting. A lot of spend a good amount of time preparing the budgets for the next financial year. This is when they work on the next year's targets and goals in the previous year. Most likely this activity starts somewhere in July, August, September of the previous year. For example, if you're doing budgets for 2026, you would start doing them somewhere in August, September of 2025. And it usually takes about 4 weeks to sometimes even 3 months to complete the entire process and then have the final targets ready for the next year. Okay. So typically what happens is usually most organizations would have a long-term vision. They would have a vision, for example, to double their profits, double their turnover, triple their profits, get into more geographies, increase their headcount strength. So this could be typical long-term vision of any organization. And we may want a roadmap for the next immediate financial year, which is the short-term 12 months. And that's where the annual business plan or the budget comes in. So what this budget or the annual business plan does is that it translates their long-term vision into a short-term roadmap that they can follow for the next immediate financial year, and it looks very similar to a P&L or a projected P&L with revenues and expenses and operating profits. Okay. A lot of people call it budgets, commitments, targets, plans. It has different names. However, the purpose is same, that it helps you set targets for the next financial year. A lot of the incentives of senior management and the departments teams are based on the possibility of that if they achieve the targets or not. So a lot of the incentives variable composition is based on. Okay. So typically, I'll just quickly walk you through a budget calendar, and there's a detailed webinar on budgeting cycle which you could later refer on our YouTube channel. So it has 3 different stages, but I'll just walk you through the budgeting calendar. Typically, there is a board meeting or a board approval meeting happening at the end of the year for the budget adoption, and the FP&A team work backwards. So for that to happen in December, FP&A team would need the CEO CFO review to be done for that budget in November. Again, for the November meeting to happen smoothly, we might need the entire set of consolidated budgets reviewed from different departments by, say, end of October. Yeah. Now, to get to the stage, they might need to do the preparations 1 month ahead or maybe 1.5 months ahead. They would be sharing templates to the different departments. They would be collecting inputs. They would have meetings, discussions to review those numbers, make changes, iterations. And once all of those that happens, the consolidation and reviews can take place. Okay. For that to happen, the planning for the budget, which is this calendar that you see, right? You need to prepare a timeline like this. You need to prepare the budget guidelines. You need to create the templates, test out those templates, and send those templates to the different teams so that they can provide the inputs. So typically, this is how a typical budget calendar looks like. It's a very fast forward version of it. We do a detailed discussion on this in our certificate programs. So that is the first FP&A function, which is budgeting. And with that, we will move to the second one, which is forecasting.
The second key FP&A function is forecasting. Now, this is a very popular interview question. So what is the difference between forecasting and budgeting, right? And many people get confused. Are they the same? Can we revise the budget? So typically the difference is that budgeting is a one-time activity carried out just before the start of the financial year, so that you get a certain estimates, you get a certain blueprint of how the next financial year is going to look like. But forecasting, on the other hand, is tracking ongoing performance of the business, and forecasting is typically prepared at regular intervals like a monthly forecast or a quarterly forecast, depending on the size and complexity of the business that you operate with. Moving on to the next slide. Yeah. So yeah, budgets, as we know, are a target or a plan for the year, right? And they are usually prepared annually, once just before the start of the financial year. And once the numbers are frozen, the board has approved the budget, it doesn't undergo a change on a regular basis. But whereas forecast is prepared either on a monthly basis or on a quarterly basis, depending on the size and complexity of the business. And it is typically a combination of actuals for the months that have been completed plus estimates for the balance period of the month. So let's look at it with an example. So on the top table that you see here, is representing the budget for 2023. So this must have been prepared somewhere at the end of 2022. And this is an oversimplified P&L, or the version of the budget that you will see, that there is revenue, then there is cost, and then there is profit. The total revenue is $1.35 million and a profitability of 12%. Now, this is something which is prepared just before the start of the financial year. The bottom table that you see is a forecast that is prepared at the end of January. So now we have moved into the financial year 2023, and now January 23 is over, and we have the actual numbers of January ready with us. Okay. Whereas we had budgeted for 100K in revenue, we have actually scored 90K in revenue, although we have been able to maintain the 12% profitability. Now, at the end of January, typically companies will prepare something called as a 1+11 forecast. Now, what is 1+11? 1 month of actuals plus 11 month of forecast. We don't call it revised budget. It is called a forecast. Similarly, if I have to prepare a forecast at the end of March, I would say 3+9 forecast, 3 months of actuals and 9 months of forecast. So my forecasted revenue for the year is $1.34 million. Now, it may again depend that once I reach April, I may be doing better. Once I reach May, I may be doing better. My forecasted revenue may undergo a change. I might actually be doing better than 1.34. I might actually be doing better than 1.35, better than 1.36, depending on the case. But basically, the difference between a budget and a forecast is that a budget is an activity carried out just before the start of the financial year. It gives you a blueprint of how the next financial year is going to look like. But forecast is all about tracking the ongoing performance of the business. It always comprises of a combination of actuals for the completed months plus the estimates for the balance period of the financial year. So I hope the difference between the budget and forecast is now clear for you guys.
So we looked at budget and forecast. Now we move to the third function, which is management reports. I will just quickly walk you through some of the most common management reports in a couple of minutes, and we can then take it from there. So what are management reports? Typically, management reports are your reports that are shared within the organization, and they are used to track the performance of the business. They are used to track the performance of the different business units or different parts of the organization. And typically, they are done on a very frequent basis, on a monthly basis. And it creates a common language between the people who are working in the organization. A lot of times you might see that people are conversing and having discussions about a particular topic, and it might not be making sense to you, but it might make sense to people who are working in the organization because they're talking about some very specific industry related or company related topics, which are probably one of parts of them. Some of the most common management reports, I'll quickly walk you through them. Month-end report and quarter-end report. So these are reports that you prepare at the end of the month or end of the quarter, where you summarize the entire month's performance versus comparing it with either the budget or forecast or sometimes both. And you do some sort of a commentary on giving business reasons to what happened in the previous month versus the budget or versus the forecast. So typically it is a report which shares business reasons of what was the performance of the previous month or the previous quarter, and how did it do versus the budget or versus the forecast, along with some commentary. Next is the flash report. We also saw this flash report in the calendar, right? So it starts at the end of the month and it continues to the time the books of accounts are closed. Sometimes they even continue later during the month on a weekly basis, based on the requirements of the business. What it does is it is a more frequent report compared to a month-end report. It is sent on a weekly or sometimes even on a more frequent, maybe on a daily basis. It reports the it's not done for all the items in the income statement. It is only done for the most important items like revenues and most important KPIs or most important drivers. And you would typically do that on a report on a weekly basis. Or sometimes if it is very important, you can do that on a daily basis. In most companies, these reports have been automated, so all of these would be connected to a source system, and then it gets refreshed automatically on a monthly or a weekly basis. Your role as an FP&A person is to analyze the report rather than creating the report, and make meaningful commentaries, bring out meaningful insights out of this flash reports. Take any action if you see anything is off. Recommend any changes that will help in driving the business forward. Okay. Then you have risk and opportunities. So we talked about the forecast in the previous key function. Once the forecast is submitted, it's not that you forget about it. You keep an eye on any risk and opportunities that might come up, which might impact your forecast number that you had previously submitted. And if there is a material risk or a material change to your forecast that you notice, you may want to flag this as a risk and opportunity in your reports, which might be on a monthly basis or maybe during a mid-month. If possible, can you present flash report? How would you look like? So it's not a part of today's agenda, but at the end, if we have time in the Q&A, we can just bring out an example of a flash report. So we can do that at the end if we have time. Okay, so let's move on in terms of so now we move to the management framework, performance evaluation framework. You have balance scorecards, you have key performance indicators, KPIs or objectives, and key results, OKRs. And what these does is they show you different ways in which the companies manage their performances or manage their businesses. So what we'll do is at the end, I'll show you a couple of examples while we take the questions of both balance scorecards and OKRs and reports if we get time at the end. So this is one of the most important one of the important FP&A functions, which is management reporting. And connected to management reporting, we move into the next two key functions, which I'll request Zawal to cover. Once the reports are done, it's not that you just have to prepare the reports and just send it to your business. It will be followed by a couple of other key activities, which we will cover in the next slide.
Fantastic. So any management report that you submit, right, to submit this management report, you will end up doing two broad set of activities. One is variance analysis and the other one is profitability analysis. So let's cover both of these functions one by one. So let's get into variance analysis. So let's go to the next slide. So budgets, as we know by now, represent the plan for the year, and forecast is a combination of actuals plus the plan for the balance period of the year or the estimate for the balance period of the year. But the senior management is always interested to know whether we are on track. Are we meeting our numbers? Are we doing over? Are we under? So what is the actual performance of the business? And this can be done by comparison. And this comparison happens between plan versus actuals, actual versus forecast, and you'll end up doing different sets of comparisons to understand how the performance is going. Current month versus previous month, current quarter versus previous quarter, current year to date versus previous year to date. All of these different kind of comparisons will tell you how your business is performing, and these will help you generate certain management commentaries. Let's move forward. So in these management commentaries, once you compare these different set of information like plan versus actuals, plan versus forecast, you will then ascertain the reason for these variances. Why there is lower than planned revenue or why there is lower than forecasted revenue, right? Why there are higher costs or why there are higher overheads. And it is not just the accounting reason that the management is interested in, right? So under accrual, over accrual. So they are not interested in accounting reasons. The management is always interested to know business reasons behind the variances. For example, if there is lower revenue, the lower revenue is because we gave more discounts. And why did we give more discounts? Because the competitor is hijacking the sales by giving more discounts, right? So maybe that could be one of the business reasons behind this. So you will always need to understand and dig deeper, go behind the normal variance and understand the reason behind it, and then capture that in your management commentary so that the business teams can take informed decisions. So that's what is the variance analysis all about. Then the second component of the management reporting is profitability analysis. Again, not a standalone activity, but something which you will end up doing as part of your management commentary on a regular basis. So let's understand what is a profitability analysis. So corporate profit, it wouldn't be an exaggeration to say that it is a sum total of all the financial decisions taken in the company, however big or small, right? Whether it is a decision to buy a dustbin or setting up a refinery, right? Every decision in the company has either a direct or an indirect impact on the profitability of the company, which means that it is very important for each product in the company to be sold profitably, each branch or business unit to be running profitability in the business. Each service needs to be delivered profitably. Each branch or a business unit or a subcomponent needs to be delivering to the profits or contributing to the profits. And why is this important? Because let's say, for example, you are a service firm, let's say a service firm like a KPMG. Yeah. Let's say there is a high profitable statutory audit department that is kind of subsidizing a loss-making management consulting department, which means the management consulting department is actually eroding the profits of the overall company, which means, do we really need it? Yes, it may happen in the short term, but in the long run, you cannot sustain those losses. So it is important that each subcomponent of the business, the way it is structured, it could be structured region-wise, branch-wise, service lane-wise, product-wise, depending on how your company is structured, each subcomponent of the business needs to start contributing to the profits. And that's why profitability analysis is important. Next slide. Yeah. So what is profitability analysis? So management would always like to dissect the profit and understand and then decide. For example, if I tell you that the company profit is $100 million, the CEO or the CFO will not be just happy about it. They will ask you further questions about which product is contributing higher to the profits, which region is doing better, which branch is doing better, which business unit is doing better, which project is contributing most to the profits, or which project is contributing least to the profits. So that is why businesses compute various types of profitability analysis and include them in their management report depending on the size and complexity of the business.
Moving on, we looked at budgeting, forecasting, management reporting, variance analysis, profitability analysis. Now moving on to some more detailed analytics, which is what we like to call it as data analytics. It might be known with different names. So typically what happens is you have on the screen, what you can see is you have different types of analysis, right from descriptive analytics to diagnostic analytics to predictive analytics to prescriptive analytics. So I'll just walk you through what these different types of analytics are. And all of this involves using large data sets to be able to get to business insights. So descriptive analytics is something that we already saw, and diagnostic analytics is something that we already saw in management reporting as variance analysis. What happened and why did it happen? So this is very related to using large sets of data, getting to a report like a management report, doing variance analysis, doing deep dive, slicing and dicing, doing drilling down, drilling up, right? All of those analysis that you need to do while you're working on any typical management report. And if you're answering the question what happened in the past, that means you're doing a descriptive analytics. If you are answering a question, why did that happen in the past, meaning you are getting to the cause or the root cause of that problem, you are doing a diagnostic analytics. And these are basic level of analytics, which is reviewing historical information and getting to the root cause of a problem. You're looking at the historical. Now, what happens at the advanced stage is you get to predictive analytics. Here you use forecasting, which is also one of the key functions that we saw earlier. Right? You use forecast to be able to predict what will happen next. So when you are creating a forecast, you are actually doing using a large data set, looking at the historical, looking at factors like trends, seasonality, and then figuring out or estimating what will be the revenue or the profit for the next period or the next 12 months or the next quarter. That is where you're doing predictive analytics. And prescriptive analytics is the final stage in the analytics framework, where you use all of this insights that you gathered in the descriptive, diagnostic, and predictive analytics phase, and recommend businesses now what they can do with the and now what they can do to improve, or now what they should do to improve their profits, or now what they should do to improve their revenues. If you're giving tangible recommendations to the business which can help them increase their revenues, reduce their expense, increase their profits, that is where the prescriptive analytics come in. You use different types of tools to be able to get into this. So, for example, you might be using a tool for doing forecasting. You might be using a budgeting tool. You might be using a visualization tool. You might be using a tool like Power BI, which helps you clean data and create a dashboard, which might help you in this descriptive diagnostic analysis. You might be using a programming language like SQL to be able to interact with data, with huge data sets. So you might need technical skills, for example, being able to understand SQL, being able to understand and work with Power BI to be able to get and interact with the large data set and move from descriptive, diagnostic, predictive to. With that, we'll move to the next function, which is also one of the, although all functions are important, this is typically important, especially for beginners or people who are getting into analyst or senior analyst role with this financial modeling. So typically, when you get into FP&A roles, you are being handed over a few half a dozen models, which would be revenue models, which would be expense models for different parts of the business or different parts of the organization, and you are expected to take over those models and continue updating those models on an ongoing basis. This is where the financial modeling skills, or what you can call Excel and financial modeling skills, will help you to become more productive. So typically, we divide financial modeling into two parts, which is financial modeling basics that you see on the left. So these are some basic skills that everybody should know, irrespective of you're working on it in FP&A or not. So basic and best practice of financial modeling, how to create a three-statement financial model, integrating the income statement, balance sheet, and the cash flow statement. These are some of the basic best practices. And in the center, what you see is financial modeling skills specifically for FP&A roles. So how to create budgets and forecasts using best practices in financial modeling. How do you do business models? How do you do revenue models? How do you create a cash flow forecast? How do you do scenario planning, sensitivity analysis? How do you create a capital budget for a long-term investment project or a long-term investment decision that you need to do? So these are typically focused financial modeling use cases for FP&A, which we cover in our programs at FP&A Professional Institute. And on the right, you see some very specific advanced use cases which are non-FP&A use cases. So typically, you don't use them in FP&A on a day-to-day basis or on a month-to-month basis. However, they are good to know if you are working in profiles like investment banking, equity research, venture capital, right? So those are areas, real estate, those are areas where portfolio management, right? We use all of these models, LBO model, MIA model, fixed income model, real estate model. So typically, we don't focus on that in our certification. We focus only on the budgeting and forecasting related financial modeling skills or FP&A related. However, typically, you should be, as a person, you should know the basics, which is on the left. And if you're working in FP&A, you should know the center part, which is specific skills on financial modeling for FP&A. With that, we move to the key function FP&A number 8, and I let Naval take.
Cool. So it is not just about analyzing your data, it is the way you communicate your story to your audience, right? Because non-finance professionals do not understand Excel sheets like how we do, right? So we need to kind of simplify things for the non-finance team members and explain to them what has happened, what can be done about it, and what is the impact, right? So in order to tell a compelling story, here is a quick framework on your screen that will help you complete your story, right? So this is a very simple framework. It says data stories equals your data plus visual plus narrative. Now let's break it down one by one. So data stories, to tell an effective data story to your audience, first, it all starts with the audience. You need to understand whether the audience is a senior at the operational level or at the tactical level. And then you need to tailor your story accordingly. Data will come from multiple sources. It'll come from your ERP, your EPM tool, your intercompany management tool, your working capital management tool, depending on what data you are using. You'll have to clean that data, make sure that is meaningful, it is aligning, and it's talking to each other. And then to communicate this data, you will choose a visual, right? A visual will be a chart or a graph or a table, or sometimes even just a bold number with a statement, right? So depending on what the audience needs to understand, you will need to use a compelling visualization, then add a narrative. For example, if I'm presenting a bar graph, and let's say this year's revenue is the highest in the last 3-4 years, I would start with a compelling headline by saying 2025, the best year ever for our institute, or the best year ever for our company. Yeah. So that's how I would start with a headline, and then that builds on your story, right? And then you explain the story to your audience. So a simple framework to be kept in mind always: data stories equals data plus visualization plus narrative. It need not always be a super fancy dashboard with trying to cover every part of the dashboard with some or the other button or a drag and drop or something like that. That is not required. Typically, simple stories, one slide at a time, one message at a time on each slide. That is what is expected from you as a finance professional, to simplify it and communicate it with the business teams. And the final function in the FP&A, 9 key functions for today, is business partnering, right? How do you truly partner with the business, right? So there are 3 key, go on, Asif. So there are 3 key things about business partnering, right? So one is insights. So what they expect from you is not data. Anybody can send pivot tables, anybody can send tables. So what do these pivot tables tell you? Right? You need to come up with a story, you need to come up with what is expected of you. Insights is what is expected of you. Then comes building relationships, building strong cross-functional relationships. In my CFO role, I spent at least 2 to 3 hours a day just with the cross-functional teams, either on coffee or on lunch table or just doing informal meetings with them, because that is important for me to understand the pulse of the business. I need to be their coach. I need to understand where they're coming from. Right? So that's why building cross-functional team relationships is super important. And the number one tip for building a relationship is give before you ask. Right? Find out what the business teams require, help them in certain aspects, then seal that deal with the relationships. And then you should be in a position to ask certain questions, gather information, and also provide certain information as well. And the third thing which you absolutely cannot compromise is understanding of the business. One of the best ways to build relationship with the business teams is to understand the business, and you can understand the business by doing 2 or 3 most important things. One is get deeper, go out of your desk, ask questions, spend time with the business teams, go out there, spend time with the sales team, go out there, spend time with the operations team. That's the number one thing that you can do. The second thing is follow all the competitors. Once you join a new company, you should know who your top 3 competitors are. What are they acting? What are they producing on LinkedIn? What kind of story they are sharing? What are the initiatives that they are taking? That helps you interact with your business teams in a much effective way. And also your competitors' action will determine or have an impact on your revenue forecast as well, right? So that's about understanding the business, right? The third thing that is important is working on your business acumen. Put yourself in a businessman's shoes and see, okay, if I was running this business, then how would I have run this? Would I have taken this decision? Would I have charged this price? Would I have got this client on board even at a low or a higher profit or a lower than average profit? What is that decision that you would have taken as otherwise as a businessman? That is when you will start developing business acumen on your own, right? So these are the 3 key things for getting business partnering right in your FP&A role. That's your insights, building relationships, and understanding your business.
We'll take a quick pause, and I see a few questions in the chat box. We'll take those questions in 10 minutes from now when we get to the Q&A section. Before that, we can just do a quick recap. So before we do the recap, can somebody list down all the 9 key skills that we discussed in the session today? So do you remember all the 9? Let's see if you can remember all the 9. Just put that in the chat box one by one. Okay, what was the first one? What was the first skill that we looked at in FP&A?
First one was very simple, right? First one was very simple, done once a year, just before the start of the financial year. I'm giving you some hints. Budgeting,
So
that's
Umesh is
right.
budgeting. Okay, what about the second one? Now you can bring them one by one.
Yeah.
Okay, what was the second one? What immediately happens after the budget is ready? What do you do next?
Forecasting.
Forecasting, okay. What about the next one? Key skill number 3. So we'll go quick. Management reporting. And what were the 2 key subcomponents of management reporting?
Variance analysis.
Okay, variance analysis and profitability analysis. Okay, so this was all on reporting and budgeting, forecasting. Then we move to data analytics, and finally some softer element, storytelling, communication, financial modeling, and business partnering. So all these are key FP&A functions that we discussed over the last 40 minutes, 45 minutes. And interestingly, this is also our curriculum, most of our curriculum for our CGFPA program, which is a 6-month in-depth FP&A certification, where we spend good amount of time, about 6 to 8 hours on each of these topics in detail, in depth, along with practical case studies, examples. So you'll see a lot of examples, case studies in those programs or certifications. But with that, let me give it back to Dhaval. Yeah, go ahead.
I hope you found these 9 key functions in FP&A helpful. So what we have been doing is that, we have been interacting with a lot of CFOs, like we mentioned, that we have interacted with the top FP&A leaders across the globe, the CFOs across the globe. And we have identified 5 critical skills that CFOs today are looking for in the finance professionals. One is your core FP&A concepts, your budgeting, forecasting, management reporting. All of these things are non-negotiable. They're looking for people who understand these concepts. Then comes financial modeling. Financial modeling specific to FP&A, like Kawasab mentioned about sensitivity analysis, scenario planning, financial modeling, all of those things are important. Then comes your data storytelling, the way you communicate your story with the business teams in a compelling story, in a simple way, so that the business teams can understand. Business teams, you are expected to be partner with the business. You are expected to coach the business teams and help them take prudent financial decisions. And of course, the fifth one is leveraging AI and technological developments in your FP&A roles, using ChatGPT, Copilot, all the tools that are coming up out there, which we can use and become more efficient as an FP&A professional. So these are the 5 core skills that CFOs are looking for in the finance professional when they are looking to hire a finance professional. Now, here's an interesting statistic for you. We did a survey amongst our CFOs, and more than 100 CFOs participated in the survey. 79% of the CFOs say that it is generally difficult to find the right FP&A talent. 79% of the people, which means today we are at a place where anything you do in FP&A, right? Everybody wants experienced FP&A professionals. Everybody wants top-notch FP&A professionals, but there are just not enough FP&A professionals out there. So anything that you do in FP&A today will definitely attract attention, or at least it will take you till the interview step. So what we have done is that we have captured all our 2 decades of experience that Asif and I have and compressed it into a compact 6-month program called Certified Global FP&A Professional Program. Now, this program has 10 exhaustive modules. We'll cover about the modules in a while. So it's a global FP&A certification. You will directly learn from CFOs and FP&A leaders, 10 comprehensive modules, all experiential and case study oriented sessions, MBA style, right? We don't teach theory, what is forecasting, that we expect you to learn all of that and then come to the classroom. We'll focus much time on practical simulations, case studies, group discussions, and that's what we'll focus on. You'll also get personalized coaching sessions with the faculty and a career coach. You'll also get placement support in terms of your resume review, your LinkedIn profiles. We also keep sharing a lot of jobs on our alumni group. Again, it's a support, it's not a guarantee. Please be mindful of that. Plus, we bring in external speakers, top CFOs, FP&A leaders every now and then. Every month, we conduct external sessions so that our students are updated with what's happening out there in the world. And also, you will get all the access to all the resources in a recorded version, and you will have permanent access to all those recordings as well. So CGFPA program, 6 months, every Saturday we meet for 2 hours, and about 1.5 hours of self-study is what is required from your end. So we'll cover a little bit more about the program. So that has 10 comprehensive modules. I'll let Asif cover the left side of the first 5 modules on the left, and then I'll speak about the modules on the right.
Before that, I just want to mention I've put the details of the program, all the details that you may want to know in terms of the curriculum, process, exams, all of that is there in the web page that I just said, our website course page. Then there is a detailed brochure that you can go through, download, and see if this program is a good fit for you. And if that is the case, if you realize, okay, this is a good program for me, for my personal and professional growth, then you can apply for it. So it's an application only based program. So you cannot just directly enroll on the website. Once you apply, one of our program manager will scan the application based on the details that you said. If you are a right fit, then we'll be contacting you for enrollment. Okay, so let me just cover the modules of CGFP program. So we talked about some of these modules in the in the webinar just 20 minutes back, right? So budgeting forecasting, what we do in budgeting forecasting, we saw the basics, right? We saw the budgeting calendar and the timeline. In the program, we cover in detail examples, simulations, case studies on different types or different parts of a budget, from revenue budget to expense side, COGS budget, production budget, marketing budget, headcount and salaries budget, using real life like data and case studies. So we cover each and every part of the budget and we make you do those exercises in the class. AI for finance and FP&A is a very new module that we added to our program just 2 months back from the 3rd cohort. So this is the 4th cohort. We added this in the previous cohort, which is now with new AI tools like ChatGPT, Copilot, and Gemini, and more are coming up. It is important to know how you can speed up your FP&A tasks or finance tasks using AI tools. So in the past, you were using Excel or any other manual way to do tasks, and it was taking an hour for you to do that. Very good possibility that you might be able to cut down that 1 hour into 10 minutes or 15 minutes, into maybe half, or maybe even do that in 1/5 of the time using some of these AI tools that I just talked about. That is what we cover. We cover very specific FP&A use cases for AI in finance and FP&A. which is that module. Management reporting, we talked about the different types of management reports. So we look at different management reports and frameworks, all of those that you saw on the slide, using examples and case studies. And if we have time in the Q&A, we'll show you a couple of examples so that you get a feel of that. Financial modeling, this is where we cover the center part of the slide that you just saw in the financial modeling, very specific FP&A related use cases of financial modeling. I'll not go again into that, but it is capital budgeting, sensitivity analysis, scenario planning, being able to create revenue and business models. So that's the core of the curriculum of the financial modeling. If there is a question, we'll come back to the question, and we'll first complete the curriculum and then we'll come back to the Q&A.
Amazing. One thing that you will always notice in FP&A roles is that you will be dealing with a lot of data, financial data, operational data, commercial data. So you need to know how do you navigate this data or large volumes of data. So that's where we cover the basics of data analytics. So we equip you with tools like Power BI and SQL. We cover the fundamentals of this. Do we make you a Power BI expert? The answer is a no. But at least we take you to a stage where you are able to prepare your first dashboard. We at least take you to a stage where you are able to comfortably use SQL to navigate large chunks of data. So that's what is covered in the data analytics module. Financial analysis, again, not just ratio analysis, but different aspects like horizontal, vertical analysis, which are required to assess the company from a internal standpoint, right? The performance of the company. So that's what is covered in the financial analysis module. Storytelling and presentations, we've already covered. So how effectively can you tell your story, presentation techniques, how do you do a budget presentation, how do you use a 2x2 matrix, how do you use a waterfall chart. All of that is covered in the storytelling and presentations module. Then comes strategy. To take any strategic decision in the company, it is not possible without sound financial analysis. So we cover all those elements where FP&A interacts with the strategy team or the strategic decisions in the company. So we look at some examples around strategic concepts and tools and how they overlap with or interact with FP&A teams. Then comes business partnering. How do you develop your business acumen? How do you build strong cross-functional relationships? How do you truly act as a coach and partner with the business teams? So that's what CFOs are looking for today. So all in all, 10 solid modules, everything you need for mastering FP&A and work confidently in FP&A roles. So back when Asif and I started probably 15 years ago, there was no online courses, there was no LinkedIn, there was no coaches available, right? So how we learned FP&A was with a lot of trial and error, with a lot of mistakes. And if your seniors are in a good mood, they will teach us. Otherwise, we do our set of mistakes and learn them. So that's how we learned FP&A. But fortunately, you have a program like this which can help you fast track our 20 years of learning in this compressed program for 6 months. So what is the eligibility criteria for this? So we at least expect you to have a bachelor's degree or an equivalent in finance, accounting or business, or alternatively, you may have any of the qualifications like CA, CPA, CMA, or any of these equivalent qualifications. We don't claim to be a substitute for your core qualifications, core accounting qualifications, but in fact, CGFPA is a supplement to your core accounting qualifications. What we expect is at least attendance of live online classes for 50%. We just only meet for 2 hours live every week, every Saturday. We at least expect you to attend live classes for 50% of the time at least. Then submit a capstone assignment within the stipulated deadline. Both of these will make you eligible for the final exam. And the final exam is a 2-hour multiple choice questions examination for 50 marks. And that will give you the score. And then finally, you will be awarded the CGFPA certification program. We have also got our CPD accreditation recently. So we are now CPD accredited, and you can claim these CPA hours for your respective accounting bodies as well. So the ROI of a course like this, I leave it to your imagination, but the monetary investment in this course is $1,495. It's a 6-month program, live program, plus we give you some pre-recorded versions, some study material to go through on your own. So totally it'll be 2 hours of live coaching every week on Saturdays in the classroom relations, case studies, group discussions, role plays, all of those things. And then we expect you to invest at least 60 to 90 minutes on your own to do the pre-reading, go through the materials, go through the case studies that we share with you so that you come prepared for the class to ask the right questions and maximize the learning. So totally 3 to 4 hours of commitment is what is expected from you every week. The next cohort is starting in April. The induction for that will happen on 22nd of March 2025, right? So that's a Saturday. So that is when the induction will be happening. So make sure that you keep this date in mind. Now the early bird, and of course, just don't take our word for it. There are tons and tons of testimonials and our students' feedback that are available on our website. You can go through any of them. You can contact them. They'll give you the feedback about our course as well. So, yeah, you want to play this, Asif?
Yeah, I think it's if you want to check, you could visit our YouTube channel. You just type my name or PIE YouTube channel name on Google or YouTube, and you will see testimonials about our program that students have.
So before we get into questions, just a last reminder, the early bird applications close tomorrow, that is 28th of February, 2025. So whether you decide to do the course or no, we would encourage you to at least fill in the application so that the team can evaluate your eligibility and come back to you with the early bird offer. Yeah, so don't stop learning. That would be my final thoughts. Always keep investing in your learning, because today we live in that world where things are constantly changing. And trust me, FP&A is very hot at this point in time. So anything that you learn in FP&A will definitely help you get better with your finance roles. So keep learning, keep growing. All the very best. Asif and I are always available on LinkedIn. If you guys have any questions, feel free to DM us and we would be happy to answer and guide you with whatever we can. Thank you. Thank you so much.
Thanks, everybody. Thank you so much.